Do you guys enjoy content that after 17 minutes of rigmarole, jumping through different articles, people ask you to buy their course? I would argue no. Do you enjoy people just spathering random facts at you in the videos and you're left essentially not knowing anything at the end, not knowing why the market went up, not knowing why the market went down, and you're almost in a worse spot than you were before? Personally, I don't think anyone enjoys that. But I do have a question for you. If in 5 minutes I could give you guys a simple understanding of what happens in the market and very simplistic levels to see what the market is doing, and all you have to pay attention to was those levels, no price action, no indicators, no course to buy, just simple 3 levels in the market, S&P and NASDAQ, do you think that would be valuable time spent? 5 minutes. Most of you probably would have said yes to that question. And thank you all so much for tuning in. It's a wonderful Sunday. Hopefully you guys having an extraordinary weekend. And this is what we do on the channel. We basically go over support levels, resistance, and rotationary points on the market. This is what we covered in last weekend's deep dive, where you knew once you started crossing 524.38 on midweek, right? That was when you said, this is where we're going to start being bullish on the market. And subsequently, we did fight around, right? But if you stayed bullish the market, once you got past that 524 level, you were approximately up 1.72%. I was actually pleasantly surprised by the bulls being able to continue this march upwards. Similarly, let's just jump over to the NASDAQ so you can see what you guys had, right? And as you saw, we started getting bullish on the NASDAQ on Thursday, right? When we started breaking through that 444.7 level and really getting more bullish into the weekend once we crossed over that 449.34 level, closing above it. We're actually above the 9-day moving average, and that was a pretty simplistic way of looking at it. Now, as I promised, I'm going to give you guys the levels that you have to pay attention to this week on the S&P and NASDAQ. Then we're going to dive into more factual and articles in the later part of the video. So let's jump back over to the S&P and clean up the charts for you guys so you know exactly what levels you have to pay attention to this week. So here we have the S&P 500, or SPY as I like to trade it. So simply put it, the high of Friday is your rotationary point bullish. You break that, that is a bullish rotation. We're going to continue that momentum. What you want to see is further rotation above 528.60, right? So we can chop around about here, but you want to really see, number one, 528.60 not be violated. You can bounce and be around that point, but you want to appreciate upwards in the market. Once you break 534.51, then you want to start looking, okay, are we going to have the momentum to keep going past 537.45? We do that, then Bob's your uncle, and we're going higher. We're filling the gap all the way to the 50-day moving average, which is going to be the first critical point that we're going to test. And really, the previous high of 554.87 is going to be where the true bullish test lies. Once we get back above that, then all-time highs is a pretty easy cake. But my thing is going to be, what I'm going to be looking for is, are we going to rotate above these levels and not retest them? And once we break these levels, I don't want to come back through them, right? So if we shoot up here and we come slamming right back down, that's no bueno. That is bearish. We do not want to be bull side the market. That's where we're going to be trimming positions and then looking to raise stops in order to compensate for any risk that we may have incurred, and looking to set up maybe possible bearish positions. Now, for the bearish theory, you start violating 528.60, right? Pivot point violate, go down lower. Violate 524.38. That is the previous all-time high going back to March of the beginning of the year. And essentially, this would then set up an A to B pattern on the way down. If you're not familiar with A to B pattern, it's a theory that this leg right here, once we retrace, basically bounce, or if you flip it bullish side, if you think about it that way, rally, then you have a pullback. You're going to then continue that same distance again. So this tells us that it's going to come down to 489, right? Personally, you don't need to understand A to B patterns to see that if we basically form a bear flag pattern, we're most likely going to violate the 200-day moving average, and we're going to be starting to look down here. But I'm not going to bore you with that because we do not have evidence right now that the bearish theory is going to play out. I'm going to go over in the later part of the video why that bearish theory can play out. But again, guys, as simple as I can make it, you have your levels on the markets, you have your 2 rotationary points. It's a very easy setup. 534.51, break to the upside, and 528.60, break to the downside, continuing to 524.38, or upside 537.45, 50-day, and then subsequently previous peak at 554.87. As simple as I can make it, and you just have to plan accordingly. Use whatever strategy you guys are doing. If you're using options, if you're using futures, if you're doing various other things, you can use these to integrate into your strategy. I'm not trying to sell you this like grandiose newest strategy that is going to revolutionize. No, you guys know what you guys trade. Use this to your advantage to make or better that positioning that you're in, to better your decision making. Now, as I promised, with the NASDAQ, right? Previous levels that we had here. Let's clean this up and then take a look at what you have to pay attention to this week. So as we did with the S&P, we can clearly see that our resistance point is that upper weekly high on the NASDAQ, 452.06, and continuation to 455.63. Said 5 so many times in the S&P, it's stuck in my head. And continuation of this gap fill will result in further bullish appreciation. You're above the 9. So again, the momentum is to the upside. The net speculative positions are pushing higher to the upside. So the consensus is upside potential. We will go over the probabilities in the later part of the video. However, as I promised, the levels for you guys, 444.47 is the level that you do not want to break below, because that starts putting into question, are you coming down to 200? Are you breaking to the weekly lows? You do not want to be back here. And I personally think that any break below 444.47 will result in a retracement downwards. The NASDAQ is going to be the thing you have to pay attention to understand if this is going to continue bullish or bearish, right? 452.06 break, push upside to 455.63. That's the gap fill. Look for possible rejection around there. If you start coming up into this, what I call no man's land, which is going to be all the way from 455.63 to 471, that's going to be very easy price action for the bulls to push up. You also have CPI this week, so it's, again, a lot of catalyst potential to that upside. And the big test for the NASDAQ is going to be in this region. It's not even going to be a single point. It's going to be from 472 all the way to 475. That's going to be a region that's going to be extreme amount of resistance, and thus it will be a huge test, right? Once you get through that, you got gaps, low price action in this upper area. NASDAQ could easily chug through it, 2-3% days going on there. And as I promised, I went over a little bit of time, guys, but 5 minutes, you have your levels for the S&P, for the NASDAQ. You can know what to trade, right? Now, if you found this information valuable, if you guys found it interesting, right? We're going to go into more of the theoretical and everything around the market now. If you want to stay for that, I greatly appreciate it. But also, if you guys wouldn't mind, hit the subscribe button and having bell notifications on. We stream live every Tuesday and Thursday, 7 p.m. Eastern. You can come ask us questions. And also, if you want more in-depth access to us, right, to the channel, we do have a Discord link down below where you can see different people interacting, right, with different sharing of ideas. No one is right, no one is wrong in that channel. It was just a commodity of ideas and different trades. We all post trades in there. So come join a like-minded community down there. It's completely free, right? We try to give you guys all this for free. Also, calculator for fundamental analysis, link down in the description below. So thank you for that. And if you guys are still watching, I hope you're finding this interesting. Throw in the comment section below what you want to see, right? Any course ideas, any video ideas, right? We want to hear your thoughts. What do you want to see? What content do you want? And we will make it for you. So now let's get into the theories of the market. And simply put it, I'm going to be a broken clock with this. And it's going to basically be, is the NASDAQ going to continue higher for us? And simply put, I don't know. My theory is with the bullish momentum heading into CPI, we're going to possibly see a massive rally on Monday, because historically when CPI continuation, a lot of these bigger hedge funds are going to go into the CPI event, buying up the market and then continue buying up the market, right? So if you're seeing a massive push on Monday, then I almost want to be continuing and betting with that. I don't think it's a rug pull. I could be completely wrong, right? Let me just preface that. We could all be completely wrong and it could be a complete rug pull. But it's really hard when you see all that volume coming in, and also we're at a pretty precipitous volume level, which basically you only got room to go up, right, from a volume perspective. So whatever direction that picks is going to basically be a straight line week. I don't think you're going to get chopped this week because you got CPI, PPI, right? So let's just jump over to the economic calendar, right? And you can see this week we got PPI on Tuesday. That's going to be the main event, and we're most likely going to stream Tuesday and Wednesday just because Tuesday you're going to have the PPI event. Wednesday, you're going to have CPI, right? We have expectations. They're expecting 3 flat and 3.2. This was actually 2.9 previously, so they revised it up higher. As we cover with the Bank of America article, that they're expecting not the greatest CPI print, but good enough for the Fed to cut rates, right? Bonkers. We're going to talk about that in the debate section of the video. But looking at this, core is in that area where I'm questioning if this number is going to come at 3.2. We could just see stagnation in inflation, and that puts a very interesting quandary on the table. I think PPI will give us early warning signs, and I am concerned why they haven't published expectations. Could it be this number is not going to come in great? Is it going to tick up, right? All these natural questions come up. Monday, there's nothing much really here. We have just a standard bill auction. So everything's going to be leading up to Tuesday. Thursday, I just think that you're going to have continuation of the move. Nothing's going to necessarily stand out. We do have some interesting data on Friday, which is building permits and housing starts. That'll kind of play into the video I did of home buildings and home market and expectations for the housing market. So going back to all of it, right? It's all going to come down to CPI. Now, what's one of the things that I talk about endlessly on the channel is the VIX, is Bitcoin, and is the Russell. So let's start with the Russell first of all. The Russell is in an interesting point, and that is because you are below the 50-day moving average, but above the 200 weekly and daily moving averages. So you're in no man's land and you're in chop fest. What this means is this thing could easily gap and go. Russell is very known to do that. We could double gap, right? We have a gap fill right here that we're trying to get back to the upside, but we could easily, with a catalyzed PPI or CPI report, gap 2-3% on the Russell and then just keep going, right? That is a possibility out there. We could also slam down and cap down on these moving averages and just keep going down lower. I do think you're going to have a baller move out there, and I'd be looking at possible debit spreads or even like inverse iron condors on options because I think you're going to have a huge catalyzed move. I don't think you're going to be in the same spot you were at the beginning of the week, at the end of the week. I think it's going to be a directional move, straight line in that direction once it picks a direction. And we're going to have to look at the ranges, right? As we covered with the S&P, you're in a very range-bound situation, right? You're kind of concentrating, is it going to be up or down in this range? Similar story, even more condensed with the NASDAQ, where we're very condensed in this range, and then we're going to explode outwards from it. We got bigger names like, right, Apple, if we look at them, right, Apple breaking back above the 50 could have huge upside potential all the way to 230. Microsoft barely holding on to that 200, but this is where stuff gets concerning. I'm looking at this, I'm like, if I ignore everything else that's going around the world, is this bullish or bearish? Well, to me, it's bearish because a straight line down, you haven't broken the downtrend. You need to show evidence that you're going to break the downtrend. You have potential, you have evidence that there's potential trend reversal here, but you haven't reversed, right? Trend is your friend till the end. If we look at Amazon, similar story, poo-poo. Netflix, kind of in no man's land's chop fest. What a dominant downtrend. Actually, a broadening wedge if we see it here to the downside. So that could be a bullish move out there setting up. So you have evidence of bulls and you have evidence of bears out there. You got Tesla below the 200-day moving average, below the 50, below the 200 weekly. This is looking bearish to me, right? Bang, bang, and going down lower. Goog looking like it doesn't want to necessarily break that 200, but we haven't had a true test. So again, no man's land is what's concerning. Meta, just a huge chop fest, right? Break the 50, go back above, break the 50, go back above. This thing can't make up its mind, but it's very range bound in this region, right? For quite some time, right? This massive region of 450 to 523, that is where you're just range bound for quite some time. The big king, NVIDIA, looking like it's not really holding up and it's looking to break that $92 level, which is the low. and dominant downtrend, right? So you're seeing this pattern of dominant downtrend, dominant downtrend. AMD may be looking like the selling's done or getting ready to drop lower, right? Intel wasn't too hot. I know Ghost was talking about leaps in the Discord for Intel. I'm concerned with it breaking that low there. I want to get the leaps cheaper, right? I want to target that $12 area is just my thought right here. This gives me Lumen vibes with the gap down and then plunge down lower. We really haven't seen true capitulation volume right here, just a singular day, right? That's not true capitulation volume as we can show on the markets, right? It's just continuation of that volume pushing higher. And then we got Bitcoin, right? For all those people that love Bitcoin, this was a strong move off the 200. However, you're seeming to lose momentum. You need to get back above that 50, and you need to get back above that 50 in a hurry, and then really 68. Anything above 68 close, you're probably going to 100. Now, you got a couple things you got to do before then. You got to break 63. You got to break 68. Simple as that. Do those two things, you're bullish on Bitcoin. I wouldn't be betting bearish right there. Would I be betting bearish on Bitcoin? Maybe if we cross back 55, come back down to maybe like the 37s, right? That's where I'd be looking bearish, but it's a very volatile market. So be careful of these big, gigantic moves one way or another. That could actually result in more things happening out in the market. So be cautious with your moves. So with that, guys, I'm actually going to turn it over to Fatal. He's going to do the biggest winners and losers, and then we'll be back for the discussion part of the video where we're going to theorize where the market is going to be going. We'll be talking about CPI, obviously. We're going to be talking about the Fed's expectations, the news, and everything. So make sure you guys stay tuned to the end, and I'll be back in a little bit.
So looking at this week, we saw a lot of volatility, guys, when it came to the S&P 500 on Monday, mainly due to, of course, the Nikkei, the Bank of Japan, and all these carry trades that were happening. However, as you guys can see on the 5-day, the S&P 500 did gain 4.1% by the end of the week. Looking at this week's upcoming earnings, though, we still have a lot of earnings, though it is starting to die down. On Monday, we got companies like Barrick Gold, Double Down, Rumble, which is one that we may want to cover, especially since we do post a lot of videos, all of our videos essentially to Rumble. On Tuesday, we got new Home Depot. So now we're going to see what's going on with the housing market, at least pseudo housing market. We're looking at Home Depot's earnings, Hut 8, PaySafe, MindMed, and a lot more. On Wednesday, we got Cisco, Dole, and even companies like Public Square. On Thursday, we got the big ones like Alibaba, Applied Materials, Walmart, JD, John Deere, which if I'm not mistaken, I did see Ghost tell me that he is planning to do a put on John Deere for Thursday, so hopefully he has good luck when it comes to that. And on Friday, we got three companies. We got Flowers Foods, CINT, and One Connect. And now let's take a look at the S&P 500 heat map. So you guys can see there's actually 50-50. Only a few companies actually did gain a lot on the week. Starting, of course, with the technology sector. Worst performer here, it is none other than the company SMCI. Guys, losing 18.55%. And the best performer, it is the company Fortinet, gaining 23.32%. Absolutely massive jump as of, I believe, Friday is when this actually occurred. Looking now into the communications sector. A lot of, actually it's 50-50, I would say. Worst performer, it is the company Warner Bros. Discovery, losing 15.05%. And the best performer being none other than the company Meta, gaining 6.07%. Looking now into the consumer cyclicals, we can see here that there's a lot of red here, guys. But nonetheless, though, the worst performer is the company Airbnb, losing 10.26%. And by the looks of it, the best performer, it is in the exact same location. And it's the company Expedia, gaining 12.57%, as well as the company Royal Caribbean Group, gaining 12.17%. Looking now into the consumer defensives, we got, actually, this is the one that we've seen the most red here. Worst performer, it is none other than the company Monster Beverage, losing 10.75%. And the best performer, it is none, I think it's that one. It's definitely Kellanova, gaining 18.89%. Looking into the financials, very 50-50 here. Worst performer, it is the company State Street Corp, losing 3.34%. And the best performer, by the looks of it, seems to be the company KKR & Co. Don't know about this company, gained 4.83%. Moving now into the healthcare sector, a lot of deep red and also a lot of deep green. We can see here that the worst performer was none other than the company that seems to be Yeah, no, it's definitely this one. McKesson Corporation losing 14.15%. I'm fairly certain that that's it. Yeah, that's definitely it. 14.15% McKesson. And the best performer, it is none other than the company Eli Lilly. I did a video on this, guys, and you guys should check it out just to see the fundamental analysis part of it. But it basically gained 10.84%. Looking now into the industrial sector, we can see here the worst performer. It is none other than the company. It is the company FedEx, losing 5.09%. But following very, very closely, we got the company Emerson Electric losing 5.05%. And the best performer seems to be, it's that one. Axon Enterprise gaining 24.85%. Absolutely crazy. We'd really like to know what in the world happened with that for it to go up that much. Now, looking at the real estate sector, a lot of these companies, guys, especially Realty Income, has been gaining recently. Do you guys see? Realty Income has been on absolute tear recently. Worst performer, though, in the sector, it is the company SBA Communications, losing 7.32%. And the best performer, it is none other than the company Ventas, gaining 5.27%. The utilities is a lot of this is in the red. Wow. Worst performer, it is the company AEP, losing 4.18%. And the best performer, is it's this one. It's NRG. If you guys can see that, NRG gaining 14.7%, but also CEG gaining 13.64%. Looking now into the energy sector, well, I love it because Exxon is up, but Chevron is down. Very interesting. Worst performer here, though, it is none other than the company Schlumberger. I love saying that word. Losing 3.07%. And the best performer, it is none other than the company Marathon Petroleum, gaining 6.8%. And lastly, in the basic materials, we got the worst performer being none other than the company Vulcan Materials, losing 8.26%. And the best performer, it is CF Industrial Holdings, gaining almost 9%. All in all, guys, the markets, it's very volatile. Now, this upcoming week, we do have inflation data on Tuesday. So we are absolutely going to live stream for that one. And I really do hope to see you all there on Tuesday, 7 p.m. Eastern Standard Time. Of course, Mike will be joining me. But that pretty much does it for this update when it comes to the S&P 500 and top gainers and losers. With that said, take it away, Mike.
So, as always, we have lovely Fed members coming out. And throw down in the comment section, guys. Do you like the new format? Going to try making this for the subsequent debate sections of the video, until he gets a dang camera that we can link this easier. But yeah, so let's start off with a bang of Fed Bowman. Inflation remains uncomfortably above target. Hint, hint, nudge, nudge. Is CPI report going to be good or bad?
I don't know. Oh, that's right, because they do. Well, they don't get it this early, though, right?
Of course they get it a week early.
They don't get it this early.
Of course they get it a week early.
No, I think that they get it like a day or two earlier, but a week.
I think they get it well ahead of the schedule.
All right. Well, if that's the case, then most likely we're going to see a massive crash in the markets then because, well, here's the thing. Because originally, or at least recently, we're finally getting the fact that bad news is bad news. So is inflation going up or remaining the same? Still with that same category, or are we back to inflation is going up now? Good news, because there's no soft. I don't even know how the market's going to take this anymore. Honestly, it has done. Investors have just done topsy-turvy, back and forth, loop-de-loops every single time when an inflation reading comes out that I just don't know how they're going to react to it anymore.
Yeah, and it's also, I think it's just news is bad. Right, I think they're taking every single piece. Like, if you look at the fervency that they took the job numbers, right? So jump into this real quick, and again, this makes no sense, guys. Right? So if we look at what they expected when for the numbers through the week, and we if you showed me this on not payrolls, but if you showed me the job numbers that came out on Thursday, right? Initial jobless claims and then continuous. I look at the continuous and I'm like, okay, so there's more people staying on unemployment, whereas there's no new initiations. But
it's not fixing the problem.
It's not fixing this problem. right?
Because here's the thing, right? Here's the
This.
thing. Here's the thing. You're eventually going to hit a plateau where there isn't going to be any more new people, right? Everybody that was already unemployed, right? Jobless. I mean, anybody
Oh,
who
like
has
a
already
diminishing return curve, right? So
exactly.
more people are coming over here, so there's less to initiate, but the
Right.
totality of the situation is going horribly wrong.
Exactly. It's like it's not about the initial; it's about the absolute.
Yeah.
That's kind of what I'm looking at there. So that's why I don't really understand why markets are rallying on an initial jobless claim going down from the expected when in and here's the thing too, it's going down from the expected. It doesn't mean that there aren't initial jobless claims. Is that it's going down from the expected. That's kind of like the weird psychology that's going on there with them.
But I love the first comment, just unnecessary hawkishness. I would say reality
necessary.
check.
Right, exactly.
Yeah.
Yep. It's a reality.
Gonna get worse. Fully agree.
We'll see what happens. What happens. I just don't know. I just don't necessarily know how they're going to react with this information, because is good news bad news, or is bad news bad news?
I'm at the point where I think just play the reaction, right?
Yeah.
Stop looking at it one way or another. Just play the reaction of the market. And right, if we look into some of the other headline articles, Wall Street sees end of Fed balance sheet runoff this year, which remember, they're expecting the Fed to start pivoting into stop running off the balance sheet even more, right? Like stop selling it off, which they haven't been able to sell off a huge chunk of it anyway. And basically easy money policy coming back.
Funny thing you said that. Notice that graph right there. I'm assuming that is the balance sheet runoff.
Yep.
Why do they only show that little piece? Because if you look at it there it is. So that is the total amount of, what is that going back to, like 2012 or something like that?
Yeah, so 2020, 2019. So the 2019, 2020 was about 4 trillion and it went up to 8. So it's like they've been able to trim off, right? And we saw this pivot from when they stopped tapering as much, right? So the slope is not as steep downward, but it's still downward. And the Fed is using this as a way to quell inflation, right? Because if they're using it as a tool, right? It's another lever they can pull to tighten policy or not tighten policy in a sense, while remaining restrictive.
My favorite part about this graph or this article is the fact that they're saying, oh, okay, we're finally getting an end to the runoff after they sold off tons of
treasuries,
tons of T-bills, tons of bonds. And then notice if you go back like 2 screens on those arrows, notice how they say it, right? They say it and only show that, and then you have to click 2 to the next one to then show the fact that they haven't even done anything.
Yeah, it's like you've gone from having your head like...
Hang on. That massive spike right there that you see from that point, I'm pretty sure you see it.
COVID, yeah.
Right there, we still haven't even touched the top of that yet.
Oh, yeah.
Or we just probably did.
That top is this. We haven't gone back here. Like, we're barely getting back down there.
So I'm looking at this and I'm just like, that's a massive sell-off?
Yep.
What are you talking about?
Yeah, but they're gonna say everything's fine. The carry trade is not gonna blow the market up, and the carry trade highlighted how over leveraged people are and how lack of liquidity, and everything's fine, right? There's no bank problems. J.P. Morgan didn't just say 35% recession probability versus 25. You know, he's just crazy, right? Biggest bank in the United States. He's crazy. And then we get something like this, which is Blue Ocean, which I've never heard of them in my life.
Me neither.
However, they're the largest overnight stock trading platform. So it's probably one of those like under tier corporations, right? That you see like, you know, your Robin Hoods, your Schwabs, and they're like the Citadels, right? The ones that actually execute the trades. And if you guys know anything more about it, throw in the comment section below. Stock trading platform has suspended operations till August 16th, the day all monthly options expire.
Is that like a triple witching or quad witching?
I do not know. I will post it in right over here, the quad witching days. So if it is, you guys will know post edit. But I don't think it is. I think in September is the next one, but I could be wrong. But the dates are going to be over here. There are concerns that Blue Ocean may have experienced liquidity issues.
Everything's fine though.
Yeah, everything's fine. You're not gonna.
Everything's fine.
Here's the next question. What if they hold a huge amount of puts, right? They sold a huge amount of puts and they don't have, or they sold all the puts and that CPI report, someone knows something and they're like, oh crap, we can't provide all this. Like we're going to get boiled in oil. Just a thought.
If they sold puts
and the market crashes.
That means that they have to. Well, that means that they would just. Oh, they would have to pay.
They don't have the cash to buy the shares.
Yeah, they want to. Yeah. I also love the second one.
Yeah,
I cannot wait for this to unfold.
Oh, this is gonna be. Yeah, it's like everything's fine. Everything is fine as the world burns in the background, right? And here's the conundrum of the century, right? Warren Buffett has spent years telling us that when people are fearful, be greedy.
How are we in extreme fear?
Why is Warren Buffett not buying in extreme fear?
Because it's supposed to go into the negatives. Pretty sure.
Oh yeah. We're gonna add like another piece of the chart. It's gonna be like bankruptcy, and we're gonna be there, right? That's when Warren Buffett's gonna buy. But
no. It's just the semicircle is gonna go to a full circle, and then we're gonna start going to like 2007, 2000, 1930.
How bad? It's gonna be 2008, 2007, and then like the Great Depression 3.0.
Yeah.
And it's gonna be underlined 2025.
I gotta be honest. It does not feel like we're in extreme fear. It really doesn't.
Yeah, it's. Well, we got to go to this, right? Like jumping to the thing here, right? So we talked about Bitcoin, but I do want to talk about VIX, right? I didn't specifically talk about VIX in the video, but if you go back to the monthly, right? There is very few times in its existence that this thing has spiked this high. This was 2008, this was COVID, and that was Monday.
Can't see that wick.
So. Yeah, it's very hard to see the wick. Sorry.
There it is. I can see the wick now.
But 3 times this thing has spiked to this level. You shed through 40, right? 40 is liquidity crisis. Case in point, Blue Ocean. And you went through 40 like a hot knife through butter, and everyone's telling you everything's fine, right? And it's just, I love it, right? Where you look at this and you're like, bad things happen when this happens, but nothing really bad has happened. So you're underscoring. VIX is not done with you. VIX gave you the warning sign, as I always love the meme of everyone that thought they bought the bottom and the Fed knocking on the door, right? Mm-hmm. Is it going to be one of these cases? Is this your early warning sign that no one's going to listen to? And, Warren Buffett's selling Apple. Like, is this the proverbial, what they'll later say is a black swan, as Nassim Taleb says it's not, right? He actually came out, the author of the Black Swan, and said this was not a black swan event. This was predictable, as Warren Buffett is seeing, right? He's seeing stuff on the horizon and he's selling, and he's like, yeah, I want no part of this. And the question is it going to continue?
We'll see. I mean, that's like honestly my whole the one thing that's given me a little bit of a white pill is the fact that, well, a little bit of a white pill in the sense that markets have been rallying ever since the initial drop on last Monday. Markets have just been rallying. We'll see how markets actually end up today at around 6 p.m. when futures open.
I think they'll be bullish personally, but the main thing is because of this, right? Like the CME Tool still like it's a 50-50 split now, right? We're no longer we're no longer in loony crazy bin. We're only in slightly psychotic.
Wow. Dude, wait. Hang on a minute. It's still a 50-50 for a 50 basis and a 25.
Yes.
It's not a 50-50 on the
rate
cuts.
Yeah. I think they're setting up themselves for disappointment. I think these probabilities are going to change drastically come Wednesday,
Tuesday.
right?
Tuesday.
PPI is Tuesday, CPI is Wednesday.
No, no, CPI always comes first, my guy.
Nope, not this time.
CPI.
My friend, Tuesday,
Oh, I thought it
Wednesday. It always goes back and forth. Halfway through the year, it's first. Then the other half of the year, it's second. Don't ask me why. It's just how it is.
Here I am thinking that we were going to stream on Tuesday, but apparently now we're going to stream on Wednesday.
No, we'll stream Tuesday and Wednesday.
Nice,
this is going to be the foreshock. Come on, we got to give you guys the preview, the pre game show, and then the main
prequel.
entertainment.
The prequel.
Yeah. The other thing is, remember how I showed you that Bank of America article? They revised this because in my video from yesterday, this was 2.9. They revised it up to 3. As Bank of America, they literally took Bank of America's expectations and were like, here you go.
Yeah, but even that, the core CPI is still going down by 0.1 year over year, but the month over month, they're expecting it to go up. That doesn't make any sense.
No, that's the same thing me and you have been debating. How many months over months can you have going up and then this just not coming to wreck your face?
Right. So,
and there's an interesting question I have for you. I was pondering this. You know how we covered where people aren't home prices, right? Aren't necessarily people coming out of the woodworks to buy.
Yeah, even though mortgage, which by the way, that does fly in the face as to what I've said, where if they cut rates, home prices are going to shoot up. Apparently, that's not happening. So that's kind of weird.
I got a theory, right? Hear me out.
Perfectly fine to be wrong, by the way. Perfectly fine to be wrong on that.
So I think you're right. Long-term home prices won't go down, and I covered that in the video. But what if this is something we didn't think about? If the consumer is under duress and they're taking out credit card debt to pay for stuff,
which we saw that fact that credit card debt has reached the all-time high.
Meaning they're rolling payments over, right? They're rolling payments and balances over. That is a negative thing for your credit score. So if your credit score continues to drop over a period of time, rates drop, right? Like come down a little bit, but it's completely offset by the credit score degradation, where let's say you had an 800 and you go to a 700. Rates dropping 1% is not going to offset the 5% that they're going to tell you difference now, because you are no longer prime credit. You have spent the last year destroying your credit because you're literally house poor. You bought and that's the other thing. Those people that bought houses at 7-8% interest rates that are saying they want to refinance, you need a good credit score to refinance too. So you not only can you not buy a home, you can't refinance the home. And it's like so interest rates are going to drop. Congratulations, but your credit score's now in the toilet, and you're just screwed in every way, shape, and form.
That is not something I thought about.
Yeah, Economic Ninja was talking about it, and I was like, he's not wrong.
That is not something I thought about. That is one factor that, if you put it into my whole theory of like, if they cut rates, people are going to, housing prices are going to shoot up. Did not think of the fact that, if people are destroying their credit, unless they buy it in cash,
which they're not, they don't have any money.
Because they're destroying their credit due to credit card debt, meaning that they don't have cash. There's no way that they could buy There's no way that they could buy a house in full cash if they can't even afford to pay a credit card. I did not think of that.
And the other thing is, who's to say, like I covered in the video, is remember, the Fed does not control the 10-year. The Fed does not control anything about the 10-year, right? So if we look at the 10-year over a period of time, right? So where we had all this craziness going on, what if the 10-year just stays flat, right? Market participants are going to say, hey, I don't feel like I'm going to get a positive return on my money for 10 years because the Fed, like I said, giving up on the inflation fight will signal that we're going to have higher inflation. And thus,
at least pseudo giving up on the inflation.
Yeah, whichever way. But the market's going to interpret, right? Market participants are going to say, well, I want to be compensated for the risk. So even if the Fed cuts rates with the lunacy of 50 basis point or 25 basis point cuts, is a 10-year even going to move? Is a 10-year going to basically be like, no, I want more?
That is an excellent point, though. That is a really, really excellent point.
So what's worse, right? This is the worst case scenario. You have this thing stay flat, your credit score go in the toilet, and then let's take your theory. Let's layer number 3 on your theory, right? Which is this goes through the roof. Principal goes up, interest rates stay the same, credit scores go in the toilet.
I wouldn't know.
Yeah, it's a possibility, right? It's a true and tried impossibility, but it's literally the worst case scenario.
I'm just saying, but what would be the consequences of that occurring?
Massive unaffordability to the
Right,
point
I
where
understand that, but what then?
so when you dry up liquidity, then the question is, how can anyone make money? How can brokerages and all, like you pull the rubber band so far this way that it finally snaps, right? To where like just you create a national housing crisis through the sense of unaffordability, right? Where people unemployment skyrockets, stock market goes in the toilet. And that's the other thing. If you, this is a scary thought, right? Where stock ownership, right? 41.6% of U.S. households and nonprofits owning, right? If we look at what happens, bad things happen when this thing shoots up, right?
Majority of that is in like 401ks though.
Fair, but if you scare people, right? People, if they cannot afford their homes, are they going to sell their home and downgrade, or are they going to go to their 401k and pull money out? And the IRS has made it easier to pull money out of your 401k, so they're incentivizing it.
That's true. In fact, they may even pull the card of like if we do get like a massive liquidity crunch, as you're saying, they might even pull the card that they did during COVID, where they're like, we will allow you to take it out without giving you the
without
penalty.
the penalty. You just have to pay for the taxes. Yep, I remember. Yeah. So the thing is, so you're going to be offered that. You're under duress. You're going to sell at the bottom, and then you're to break even on your financial situation, and then the stock market's going to rally, and it's like you will. It's going to be mind-boggling, like this report. And also, we're going to see, right? So what all this is theories, but this is going to be the report that defines what the stock market thinks going into the Fed meeting, right? And this is going to define how we're going to trade for the next 30 days.
I wouldn't say theory, hypothesis.
Yeah.
I prefer the word hypothesis. But this is why, again, not financial advice. And we never give any financial advice here. This is just a suggestion to anybody who is going to retire in the next 5 years. You should absolutely not be in the stock market. Even if everything was good, even if we weren't having bubbles left and right, I still would not suggest you being in the stock market. No. Seriously, if you're within 5 years, you should not be in the stock market. You should absolutely just be in bonds, especially now that bonds are like 4 or 5% for like 1 year.
They're paying you a real rate, and people are just being like, no, I want my 20% in the stock market. Yeah, 20% comes with risk. It's with
5 years to retirement, you should not be in the stock market. Just a suggestion, not telling anybody what to do, but you should not be. Even if everything was fine, I still would say don't. It's not worth the risk.
Why risk? You don't have the time to make it up.
No, you don't. Unless you have a strategy like a dividend strategy, then that's a separate thing. But if you're solely relying on your 401k for your retirement, suggestion, not advice, just suggestion, probably not be in stocks right now or ever if you're within 5 years of retirement.
Yeah. Or you should not be levered. Take a page out of Warren Buffett's book. Look at the amount of leverage you have, the risk on the table, and possibly cut a bit of that risk, right? Just taking a page out of his own book.
Great.
So, yep. With that, guys, we're going to wrap it up. Thank you all so much for watching. Make sure you guys are subscribed so you catch us on the Tuesday and Wednesday live stream this week. And also follow on the Discord. We throw trades on there, ideas, talk to us, everything, all that and more. Hope you found this information valuable. And we will see you on the PPI News Day, which is going to be fantastic.
And before we go, I want to ask everybody a question. I would like to do like a seminar live stream where I'm like teaching a group of people on our Discord channel about dividends and passive income. So if you guys are interested in that, let us know in the comment section below as well, so that way I can get all of that set up. Yeah, that's all I wanted to say.
All right, so thank you all so much for tuning in. I hope to see you in the next one, and let us know how you guys like the new configuration. Thank you again. I'll see you in the next one.